Hello, everyone. Thank you for joining us today for Fundera's webinar on how to apply for a PPP loan in round two. I'm Shannon, part of Fundera's webinar team, and I'm hosting today's webinar alongside Fundera's PPP expert and Senior Director of Finance, Justin Ridgely. For those of you who don't know, Justin has been hosting PPP webinars since the program first started last year and has answered hundreds of questions from small business owners. Today, Justin will start off the webinar with a presentation on what you need to know about PPP Round 2. After that, we'll jump into the Q&A portion, so please submit any questions you have for Justin throughout the webinar by using the Zoom Q&A box on the bottom of your screen. And for those of you who may be joining us for the first time today, I wanted to let you know that beyond providing informational resources, Fundera can also help you navigate your PPP loan options. You can visit fundera.com/PPP to get started, or simply visit our website. As always, we'll send a follow-up recording email this evening that will also include the presentation deck and other resources from our blog. So with all of that covered, thank you again for everyone for joining us today. And I'm going to hand things over to Fundera's PPP expert, Justin Ridgely.
Thanks, Shannon. I'm going to start just by reiterating the disclaimer that's on the page one of the slide here, is that none of this is financial or legal advice. We're obviously, not a bank here. We aren't the SBA, and all this guidance is our read of the, and my read and opinion on how to navigate this program, what it means, and everything else related to that. So with that in mind, I'll get started. So let me just flip the slide here. So that's just me. Okay, as a brief overview, recently the Consolidated Appropriations Act was passed. Part of this was the Hard Hit Act, which allocates new monies to new relief funding, $284 billion to new PPP, as well as additional 35 for Save Our Stages grants and EIDL grants as well. The PPP money is split between an extension of the previous program, which we'll refer to as first draw, and then second draw, which is second PPP loans for those businesses that can demonstrate a negative impact from the coronavirus-driven economy over the past year or so. And I'll jump into the details of that a little later. Next up, as far as where we are right now, this bill was passed and signed at the end of the year. Right now, it's in the process of opening up. In contrast to how it went last time, where it was opened up to everyone at first, this is being rolled out in a few phases. There was some dissatisfaction last time around where a lot of the big banks, Bank of America, Citi, that kind of thing, jumped in at the very beginning, slotted some of their, larger clients and bigger businesses in, and soaked up a lot of dollars within the first 2 weeks of the program. So this time around, there was a concerted effort to maybe open this up in a little more staged manner, though the separation between some of these dates is pretty small. But anyway, on last Friday, on the 11th, the program opened up to CDFIs, MDIs, CDCs. These are basically community financial institutions serving, are focused on underserved communities. That opened up for first draw only last Friday, and then yesterday for first and second draw at these institutions. These are all relatively small. Most people probably won't be familiar with them, but they are open presently. Next is banks with assets of $1 billion or less, and that opens up tomorrow at 9 a.m. for both first and second draw loans. We have a link here live on Fundera's site where you can start getting your application in today for those in anticipation of when that opens up tomorrow. Then on Monday, the 19th, all banks will have access to submit PPP applications to the SBA, and that encompasses the biggest banks, like I said before, as well as everything else previously mentioned. One other quick note that I just found out today is that the SBA is running ID checks this time around to prevent fraud. So, just one thing to keep in mind, if the process maybe seems a little bit different, maybe you get asked a couple more questions, and maybe it takes a little longer to get your loan confirmed, even if you have a simple application. This might be why. There was something like I think we had $5 billion in fraud last time around, and the SBA is seeking to avoid that this time. So let's talk real quick about the updates to the main program, which which I said we'll refer to as first draw. A lot of these rules also kind of apply to the second draw program, but basically it was expanded a bit to make additional types of organizations eligible, which are things like housing co-ops and certain categories of 501c, charitable organizations. There's also, new restrictions on if you can't receive a loan if your business was not in operation before February, if you receive an SOS grant, etc. There's also some additions of payroll costs that are now eligible for forgiveness, like group life, disability, vision, and dental insurance. There's also, in the fourth bullet, there's been a big increase in the types of expenses that can be classified as forgivable. Operations expenditures, which is, as I note here, a very general and useful category, which I encourage people. There's some resource at the end of this presentation where you can kind of go on the SBA's website and see the exact definition in the first bullet I have on that page. But these encompass a lot of different things. Basically, if you think of an operations expenditure, you could put everything from software to anything else in there. You also have property damage costs, supplier costs, and worker protection expenditures. This is a quick example. If you're a restaurant and you bought heaters, if you put up partitions, if you build an outside structure, that would all be forgivable as well, whereas previously that type of expense would not have been forgivable. The last bullet on this page is probably doesn't apply to too many people, but it's saying if you returned or declined a portion of your loan the first time around, you're eligible to get that money, kind of like amend your loan in this time around. This also this bill covered some updates to forgiveness. For those of you that have been attending these webinars, I talked about this a lot, where we were hoping to see, loans 150K and under be basically automatically forgiven. This has now happened and was finally passed, which, the goal here was to free up banks to do second draw loans by easing the logistical burden for them doing forgiveness on the first round of loans. So this should make it easier for something like, I think 85% of all borrowers in the original PPP program had loans 150K and under. So it's really going to be a simple form. We haven't seen this yet, but anticipate it should come out pretty soon. Also, EIDL grants are no longer netted against the forgiveness amount, which was something a lot of borrowers were kind of asking about, saying, I had a 100K PPP loan and a 10K grant, and then you would go to get your PPP loan forgiven and they'd give you 90K. This is no longer happening, and they won't be netted against the amount after the fact. I'm going to jump in now to the highlight of the newest program, which is second draw. So the way you can think about this is, the rules from the first round and the first draw kind of changes all pretty much apply to these second draw loans in terms of, what expenses are eligible for forgiveness, general process, that kind of thing. The rules on eligibility, right, have been expanded and also match up here. But this is a pot of money that's specifically designed to target businesses that have had a significant revenue reduction over the past year when compared to 2019, essentially trying to target the most impacted businesses with additional dollars. So the eligibility here is you have to have received and used a first PPP loan, meaning you have to have not only got it, but you have to have also spent the whole thing. You don't have to have applied for forgiveness. That's not a stipulation. And there were good reasons for a lot of people to wait, especially because we were kind of waiting on that forgiveness simplification rule. So you don't have to have forgiveness, but you do have to have had a first round loan and you have to have spent it. Second, this similar to what I said earlier, the SBA this time in Congress and all the drafters of this bill want to target smaller businesses. So that's less than 300 employees. If you're a larger business that has more than that, you're not eligible for a second grant. The key operative point of this is you have to demonstrate a revenue loss of 25% or more. This can be done in a variety of ways, and we're interested to see exactly how these questions are asked when the large majority of banks kind of release their applications. But generally what it'll be is you can either compare, all of 2020 against 2019. You could compare Q3 2020 versus Q3 2019. But however you do it, you're going to have to establish a 25% or greater revenue loss between the two comparable periods. If you've got a 24% loss, doesn't count. It has to be 25% or more. this also doesn't take into account, the PPP forgiveness itself. Like if you in Q3 would have had a 25% drop, but you count your revenue, quote unquote, from the forgiveness that you got during that quarter, that doesn't count as revenue, and you would still be eligible. That shouldn't take your revenue reduction down at all. The loan amount largely remains the same, which is 2.5 times your trailing 12 months payroll. And like I said, in the first draw update, there are a few more things that can be added in there, but shouldn't have a material impact for most business owners. There are some additional timing rules with seasonal and other types of business and new businesses that I would encourage you to kind of go through the process if you fall into that bucket and read the application, read the rules. It's a bit detailed. The one other point here is that for business owners with the NAICS code, which is just a business classification code through a government kind of classification system, for that code 72, which is accommodation and food services business, those businesses are being targeted even more with a limit of 3.5 times that trailing 12 months payroll or 2019 annual payroll. So if you're say a restaurant owner or a bar owner that took a loan off of your 2019 payroll, have used it, isn't eligible for an SOS grant and is applying to, get another loan here, you can actually do 3.5 times whatever number you used for your first loan. So it should give you kind of another turn on that grant, which is great. Like I said before, same forgiveness rules apply as PPP 1.0. And the way this one works in terms of the covered period is that, essentially before, if you got a PPP loan early in the process, you had an 8-week covered period. After, I think, early June, you could switch to either 8-week or 24-week, but you could also apply for forgiveness before 24 weeks. And then you also had through the end of the year to raise your head count, right, to meet that safe harbor and not get penalized on forgiveness. That is all kind of gone. That flexibility or different kind of systems is gone in this version, and essentially everyone has the same period, the same period for forgiveness, the same covered period, and it ends exactly after, like, you just take I think it's 16 weeks, and you take it, and from the date you got your loan to the end of that, there is no like 12/31 limit like we had before. I'm going to cover real quick the Save Our Stages program, which could be applicable to some people. It's just it's essentially grants that are targeted at live venue businesses, talent agents, museums, movie theaters, that kind of thing, and it works on basically a percentage of revenue basis. And these can be pretty generous if your business falls into this. So if this does apply to you, I would take some time to read this slide, go to the additional resources slide, and then go and look up additional details on this program. Just note that if you do get an SOS grant, you will not be eligible for PPP loans this time around. One other key update, which I talked about a lot in previous webinars as well, is that the IRS had issued a rule last April, which essentially was disallowing the tax deductibility of the forgivable expenses, creating essentially a tax burden on your PPP forgiveness amount. The lawmakers, came out after this and said, this isn't what we intended when we crafted the CARES Act that was passed last March. The IRS didn't really update it for the whole rest of 2020, which was somewhat bizarre. But in this new law, it specifically mandates that the forgivable expenses are tax deductible, meaning you will not have any additional tax burden on your forgiveness amount, and those expenses are deductible. So this is pretty nice. I mean, for a lot of companies, this is a meaningful chunk of revenue back, I guess, if you consider the grant to be income or revenue. So these are the additional resources that I've listed here. Some key stuff here just from the SBA itself, from Treasury, from some accounting firms and other companies that have taken a deep dive in the bill itself. I'm going to leave this here, but I wanted to spend a lot of time today, Shannon, on questions, as I know we had a fair number submitted beforehand, and I know probably a lot of people on the line would like to ask some specific questions as well. So we can jump straight into that.
Great, Justin. Thank you so much for going over those updates. So again, as a reminder to everyone tuning in, you can submit your webinar questions using the Zoom Q&A box on the bottom of your screen. You can also upvote questions that you would like to get answered in case your question already has been submitted. So with that said, we'll go ahead and get started with some initial questions. The first question we have is in general about applying. So we have a question from a business owner who says their last PPP lender still shows only the pre-application is available. Their question is, are some lenders behind on opening up their applications, and should we look for another lender to submit to so we will not be late to apply?
So as I covered kind of in the second slide about updates, there are lenders that are open now, which are community lenders. If you have one of those that you can access, that is open now. If you got your first loan, from a bank that's 1 billion in assets or below, which I imagine no one's going to know off the top of their head, then that won't be open until tomorrow at 9. And then on Monday, the rest of the lenders essentially open up. So I would say that 99.9% of lenders that made PPP loans in the first round aren't open yet. So to see that message on the lender's website that you used the first time around is not surprising at all. And I would either expect to see that change tomorrow or Monday, with the possibility that the bank could delay it a little further, because they're still getting their online application up and running for this second draw program. One thing I do want to mention while we're on this topic is that it will be easier for most people, if you're going to use, say, your 2019 average monthly payroll again as the basis for your loan on the second draw, you will have an easier time going through your lender from the first time around. Now, you may not want to do this. Maybe you didn't have a great experience and maybe they took too long, and there are faster lenders out there. That's fine, but they will have that paperwork on hand, and it should be a lot simpler to just use that same payroll amount and just get yourself another loan. So keep that in mind. But again, there was a lot of process differences between lenders, and you may want to change if you didn't have a great experience the last time around.
We have another question about that topic. This person asks, can we apply to more than one lender to give us a better chance of getting a loan?
Yeah, you can. This happened a lot the last time around, where people would apply to multiple places hoping that they could get through. That's still doable. It could create some confusion. We had some instances last time when we did this at Fundera where someone would apply to 3 lenders and, one would approve them but wouldn't notify them yet. And they'd get turned down by the other 2 because the other 2 were checking the SBA system and seeing that that business already had an approved loan, but maybe that lender that did get the approved loan hadn't let the borrower know that yet. So it created some confusion there, and you may feel like, hey, I applied to 3, I got turned down by 2 saying I already have one, but I didn't hear I have one. That's very disconcerting, and that could happen again. I imagine the process on the back end is a little bit more efficient, but you are allowed to do that. As far as I know, there's no rule that I've seen precluding people from applying to more than one lender. You just won't be able to get more than one loan because they all check against a central database with the SBA.
Great, and we did briefly cover this in the intro, but in case those who are just now tuning in didn't hear, will Fundera be able to assist with PPP Loan 2, and when will this application be live?
Yeah, so we have a link let's see, well, in this slide this slide deck will go out to everyone. I have a link that I put here, and I'll just share it in the chat as well. Actually, there is no chat. Just check your email after this, but we do have links to banks that are getting ready to go for tomorrow and for Monday, but we aren't plugged into any CDFIs or anything like that because they're too specific on who they target. But we do have a link on our site that we'll send around at our PPP hub that can, plug you into lenders that will be offering loans come Friday and then subsequently Monday.